Hi everyone. Today is Wednesday, January the 22nd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Jumping right into the hourly charts here, we can see that we still have a lot of upside pressure. A lot of bears acting kind of angry, so I am suspecting that pullbacks will remain buy zones. So if we stare down the E-Mini S&Ps, we can see that we are in a little bit of a topping formation over the last hour. Let's drill in here and see what we need to hold in order to keep riding to the north. Now, one thing to stare down, momentum is dipping a little, and so it's telling us the buying opportunities are below. And so intraday, I am thinking that the first area that the traders will try to buy is this 6105 area in the ES. The breakaway formation above 6115 brings new buyers into the fray, and it will be sellers running for the exit. But a couple of things to note. One, we have this declining momentum, and two, we are on the edge of the Keltner band. So they're pushing up, but I suspect inventory correction at the opening ranges or a big spike in the morning that pulls back. Notice yesterday, is that yesterday? No, this was yesterday. We had sort of the same thing, the big spike up, the pullback, but the moving averages told us the directional momentum on the day. Remember that. When in doubt, zoom out, right? Now, if you're looking for a nice buy and you get that 6105, your stop's going to be at least 8 points wide there because of value area high at 6097. Let's draw Fibonacci to see what price extensions we get off of that 3 a.m. candlestick, which is the widest one of the range. If we take a look at the opening tick, that could be the deeper buy of the morning, and that's at 6094. Because momentum is drifting to the north, we do know there's sellers above, so a breakaway formation, you want to move that stop up very quickly into these higher levels, 6116, 6121, 6127 is what I'm seeing. We could have a big expansion, but that's, it could happen. It's not out of the question, but my suspicion is a bounce that rotates downward. So we'll need to watch for the collapse or the failure of price to hold these higher levels. Let's take a look at the NQ. This is the E-Mini NASDAQ sitting at the hourly form. Whoa, did Netflix just knock the cover off the ball? It's a sad state of affairs in terms of what it says about us, but we like to watch television, and they added 18.9 million subscribers in the last quarter. I think that's a lot of sports-generated stuff. That's really a sweet spot for them. They are coming off of the $1,000 mark, though. Okay, back to the NQ. We can see that our opening candlestick is around 21,808. That is actually above the close of the prior day, which sits at, 21,773. Deep dips, pullbacks, all right? It is trying to break away up above this 21,900 area. There is a gamma line at 21,938. So we could blow past that, but everything suggests we're at the top of this range, and so I'm looking for a topping formation, really across the board. And so far, as long as we keep making higher lows, that topping formation is not in place. First possibility for a buy zone, 21,871 if you're buying a pullback. If you want to take the top of the 1 hour candlestick congestion, we're looking at about 21,891. That's also a gamma line to watch this morning. Should we lose 21,871, we'll stair step into 21,836, and then that opening range at 21,808. But buyers are going to be present at every single one of these major dips simply because momentum and trend are so high. We really have to watch out for that. If we do Fibonacci on the biggest candlestick, which occurs also at 3 a.m. here, we can see that we're looking for that line around 21,940. The gamma line is just a few points below that. And then 21,972. And then, of course, the retest of 22,000. All right. Again, a lot of bears are pretty uptight. And so they might keep shorting these tops and getting themselves stopped out, which could give us a pretty solid run to the upside. Just noticing a lot of bears being very pissed. And so, sorry about the language, that tends to have us just grinding higher. All right, let's take a look at the YM. Yesterday, the YM absolutely took off. I had a long, and would you believe, I closed it at 44,000. That was my target. Why? It was the prior high that I wanted to breach. And then after that, I'm like, I'm leaving. So, would I have loved for that to look better? Sure. But I did what my system told me to, and there it is, right? So it is what it is. Okay, now, what should we be looking for here? That 3 a.m. candlestick, also a measure. This chart's already in a breakaway, right? It's closed above that 3 a.m. candlestick, and it is now breaking out to the north. We've got 44,380 at the newest test, and that tells us, what do we have here? That tells us that price action is in continuation. It is bullish, but divergent, and so pullbacks are good buy zones. What's a great buy zone? Starting at 44,314, that might be a nice run. If not, old resistance, new support at 44,269. The opening candlestick formation confirms that area as we have that 44,250-ish zone. If per happenstance we lose this level, buyers should immediately come in. If they don't, you got to click that and check yourself. From a downward perspective, if the bears do get what they want, we'll be rotating back into the heavy congestion zone near 44,155. All right, let's take a look at micro Bitcoin. Micro Bitcoin futures, MBT, you can see, wow, this is quite coiling, isn't it? Lower highs, higher lows, overall trend is upside. And so that does tell us that we are likely to see the break to the north. Notice, look what happens when momentum gets down here and we get on top of the moving averages. So far, we're not on top of the moving averages. 105 has been a fair support zone with a stop at 104,700. If we lose 104,700, we've got negative drift. We have a location that's negative, and so we'll drift back into liquidity near 103 and then potentially 102. Price action still looks pretty solid to the upside there in general. You just don't want to buy the breakout zones, especially when momentum gets all the way up here. You have to think about reversion to the mean. And the best reversion to the mean that I can see with micro Bitcoin is the 20 exponential on the hourly. Okay, and right now that's flat. That means below we buy and above we take profit, right? We just have to get above these moving averages and it's home free to the upside. If we don't, this actually is triggering some sort of shorting action, but it's still going to pull into support and bounce. Okay? Now, let's take a look at oil. You guys know what I think about energy. Ultimately, it is going to continue to rise. I do want to start with the WTI West Texas, and that is the CL is the ticker for that. Old resistance at 76.34 being tested as support. My thought is, and it really hasn't come in there yet, my thought is 74.50 makes for a good buy, but do notice yesterday we came into 75 and bounced. So we are testing that 75 region again today. It could be a nice bounce zone if we can get up over 76.30. Let's go to the hourly chart here. We can see the battleground. It is Wednesday. We do have the EIA report. So we do have the possibility that we'll have something interesting. But, very often the EIA report tends to just give us reflexive action unless it's some sort of horrific draw or horrific build. I mean, like in the double-digit millions of barrels. So right now, trying to hold the point of control, that's 75.94. We are making higher lows. My thought is buy zones right here at 75.60, $75.60. Target 76.45. And if we hold above that 76.45, we'll move back into the 77.20 area. A lot of people are thinking about shorting oil because we are adapting new drilling policies. I'm not sure that's actually going to be what unfolds. We'll see. All right. Volume to the upside pretty low here. So here's what we want to look at. If indeed we lose this 75.40, which we've been bouncing at fairly nicely, long action is not going to be present here. It's going to bounce into resistance and then collapse back down into support near 75, at which point it'll be sideways action until the chart breaks away. Right now, it looks like it's trying to break away. So this key area at the 75.60-ish zone should be a buying pressure event in the short run. I would say be very careful. With oil, anything can happen, and it can get crazy, but follow those moving averages. Gold, finally breaking out again. A lot of people buying the gold complex, to include central banks. Here's what we have in our futures market. We can see lower volumes on this higher press up. We can also see negative divergence on this higher press up. Notice what that means relative to price motion. It still comes back and holds the moving average. This is a buy the dip formation until it loses our 27.59 area. That was the zone we were watching yesterday. Broke out right towards the end of the day. Notice how nice the pullback was into the area of support near 2740, right? 2740 remains a support edge. It is the volume point of control, essentially. 2746 is the volume point of control. This is bullish, folks. So let's take a look at upward pressure events that are sitting potentially in here by drawing a Fibonacci. We're going to take this very last wave, and we can see 1.618 is 2779, and then the 2 spot is 2794. I do expect gold to continue to rise on any kind of real dip that we see in the market. I would love to see a savage dip. So far, one not coming. So things are going to sit as they are in the near term. Do we have a little bit of topping? Yes. It means the dips are buy zones. 2762 to 2760 gives us the great buying pressure event. Let's go to SPY. SPY has spent the last 4 hours sitting in this range. Is it bullish? Yes. Could the bullish action continue? Yes. Could it also pull back before it bounces? Yes. Where do I think the ideal buy point is? 602. 602. Could it come in and hold 604 and move upward? Look at all the liquidity measures up here near 610. That's pretty incredible. All right. So big potential for upside moves into 610 and then higher. We've got a line in the sand at 610, and we've got these Fibonacci's that are walking us up deep dips, buy zones. If you're patient and you're watching the moving averages, you might say to yourself, Emery, I don't quite like how these averages look. If I'm playing the 1 hour, hang on, let's try and get this one in view. Oh, for heaven's sakes. Let's see. That's the hull, and here's the EMA. Let's say you wanted to make that EMA a 10. Oh, maybe make it a 14. Let's see what that looks like. That area, at least once a day, it gives you an opportunity to go long. And so not a bad thing to look at, right? Let's close this hull off for now. We'll leave it quiet and we'll look at that 14 EMA, and you can see on the hourly chart, anytime it comes close in the near term, it's been bouncing, and that's happened for the last few days. Notice the bullish action here. If it starts breaking down, the first thing you're going to lose is the VWAP. So wait for it. If it bounces but cannot recapture the VWAP, we've got a problem with more upside, but so far, looking straight up. All right, let's take a look at the Qs. Staring the Qs down, same sort of thing. We've got about 5 hours of sideways action. I like to look at the 8 to 9 o'clock candlestick, and that is in process right now. For the Qs, you can see that it breaks this 14 fairly quickly, but then also recovers it. Sometimes it breaks the 14 and continues downward. Remember the goal. If I break the 14 EMA and I bounce, I must close above the VWAP or there is a problem. That's how you know price action is breaking down on the dips. Not to mention, you see momentum drifting as well. So immediately, if you buy at the dips of these moving averages, the next candlestick formation needs to be upside and getting right above that VWAP. That's what's going to keep you in between the lines today. Good luck trading. We've got our midday Moneyball report, and watch your risk.